First thing first, every partner's contribution, whether it's cash, assets, or years of hard-earned experience, gets neatly documented. Think of it like shredding into a tin. Everyone's ticket is secured, so no one jumps the line. All contributions are agreed in advance and listed in a special schedule attached in the agreement. And yes, the LLP even gives each partner a receipt as a proof that you are officially on the right. These systems also make sure the money and assets go straight into growing the business, not someone's personal piggy bank. And whether it's finisher, management, skills, or straight connections, each contribution is valid value. Sometimes the right needs a little extra fuel, like when the business needs more working capital. The LLP can call on partners for more contribution, but only with everyone's thumbs up and in proportion to their professions. No surprise, no unhappiness. Now comes the fun part, sharing the treasure. Profits are split according to each partner's agreed percentages. CHAUDHRY get the largest share, which is 50%, while Riaz and Alin got their share, which is 20 and 30%. No confusion, no arguments, just a clear path from the book to each partner's account. Even if the business hit a bump and lose money, those are shared fairly according to the capital accounts. Think of it like everyone wearing a safety harness. Risk is shared and everyone stays on board. And here's a bonus, there's no withholding to tax on profits. That means the profits go straight to the partners, smooth sailing to the way. So let me make it easy for you. Long story short, these clauses turns potential chaos into order. They reward contribution, ensure fairness, and keep the LLP running like a well-oiled machine. So partners can focus on growing their business, not counting pennies.
Hello everyone! Today we are looking at how our LLP is governed, which outlines who makes the decisions and how voting power is distributed. It's important to note that the default rules of the LLP Act is override in this agreement, giving us a customized structure that fits our specific business needs. Firstly, let's talk about daily operations. CHAUDHRY is designated as our managing partner, which means CHAUDHRY holds the sole authority over the day-to-day functions, everything from curriculum development to hiring staff and student enrollment. We also have a specific structure for our branches. Riaz is appointed as the branch manager for the Seremban location. While Riaz has the power to handle the branch's operations, he remains under the oversight and authority of the managing partner. Now, let's look at how we vote. In this LLP, voting power is not equal and it isn't tied to how much capital a partner puts in. Instead, it's fixed. CHAUDHRY holds 60%, Anak Cemerlang holds 30%, and Riaz holds 10%. Because ordinary decisions are made by the majority vote, any decision supported by the managing partner who holds 60% is legally binding. Regarding Anak Cemerlang Sedian Berhad, they serve as a non-executive partner. To protect our proprietary data, they are restricted from daily management and do not have the access to our student database or curriculum without written approval. While CHAUDHRY handles most decisions, there are 3 critical areas where we require unanimous consent, meaning 100% of the voting power must agree, and these are: first, changing the fundamental nature of our business; second, winding up or dissolving the LLP; and lastly, admitting any new partners into the fold. This structure ensures that while daily management is fast and efficient, most life-altering changes to the company require everyone to be on board. So that's all. Thank you for your time.
As for the first requirement, in which were confidentiality as well as non-competition, it is clearly stated in the agreement that any partner, once the LLP has been formed, neither of them can use any of data or information collected from the LLP for the purpose of personal interest. Therefore, in these circumstances, Alia were prohibited to use any of data which she has collected throughout the business LLP to be used for her own personal business, in which were the Anak Kandar Cemerlang Sedian Berhad. Moreover, as for the second requirement, in which in regards for non-competition, it is stated that clearly every partner in the circumstances has breached this obligation. They were required to pay back all of the profit in which has been obtained throughout the competing business towards the LLP business itself. Therefore, in the circumstances where Alia has breached this duty, she is under the obligation in which to return or give any profits she obtained during the course of the business in the anak kanda cemerlang senyerbat toward the LLP business for the purpose of sanction which has been provided under the agreement. Moreover, as for the second condition, in which in regards to indemnity and liabilities, it is clearly stated that once LLP is formed, it is now considered as a separate legal entity, in which this means that once LLP is formed, the law shall treat it as an artificial person. Therefore, as an artificial person, the LLP has the right to be sued and to sue. Thus, in the circumstances where there were loan liabilities in which has occurred during the LLP, it is not shall be borne by the partner but the LLP itself. Therefore, in the circumstances where the partnership has obtained any loan from banks and has failed to pay any of the loan, Chaudhry, Riaz as well as Alin shall not be subjected to the liability as it is now under the obligation of the LLP itself to settle its loan. Moreover, as for the contract, it is stated that any contract which has been formed before the LLP is formed shall now under the obligation of the LLP itself. This is because there shall be agreement in which be made among the partner in which to shift the contract in which has been made before the formation of the LLP towards the LLP. Therefore, this including the past contract in which has been performed and formed by Chaudhry. Therefore, after the formation of the contract, every partner has required to sign a agreement or novation of agreement in which clearly stated to transfer all of the liabilities as well as right that occur from the contract which has been performed or formed before the LLP towards the LLP and not shall be subject to the Chaudhry itself. Moreover, as for the permit and license for the kindergarten, it is clearly stated that once the LLP is an artificial person, it has the right to obtain license under its own name. Therefore, this means that the LLP itself need to apply for new permits since the old permit which has been registered under Chaudhry's name shall be terminated as it is now artificial person which has the right to obtain its own permit. Therefore, all of the permit obtained by Chaudhry shall be terminated and revoked as LLPR now has the right to obtain license under its own name. Thus, there are procedures in which the LLP need to go through in order for it to obtain license for the performance and ongoing of the kindergarten business itself.
We will now move on to which is employment continuity. This section is critical because it governs how we handle the most important asset of Jauhar Kindergarten, our human capital. There are 20 existing employees across the Shah Alam and Seremban branches, and to ensure operational stability, we have drafted this section to transfer them seamlessly into the new LLP. I will read each clause in full so we are clear on the obligation. First, regarding the assumption of employment, which reads as follows. The partner agree that the Limited Liability Partnership LLP will extend employment offers to all 20 current employees, which working with partner Chaudhry in running Jauhar Kindergarten, which include both the Shah Alam and Seremban branches. What this clause establishes is a mandatory obligation. We are not picking and choosing staff. We are agreeing to take on the full team, all 20 employees. This ensures that the day-to-day operations in the classrooms remain uninterrupted during this transition. Next, regarding terms and conditions, it reads, the LLP will offer employment to the employees on terms and conditions that are the same as or more favorable than the term prior to signing this agreement. This will include but not be limited to salary, allowances, and benefits. This is our no detriment guarantee. We are legally promising that no employee will suffer a pay cut or loss of benefits because of this business restructuring. This allows Partner Kadri to reassure the staff that the new management structure is a positive change, not a threat to their livelihood. Finally, regarding recognition of service continuity, this is the most legally significant clause in this section as it reads, the LLP accepts all periods of employment served by employees at Jauhar Kindergarten prior to incorporation of this LLP as continuous service entitlements such as but not limited to termination benefits, sick leave, and annual leave. The LLP shall bear any and all potential rights or claims associated with such prior service. This brings us to the core legal strategy known as successor liability, by explicitly stating that their service is continuous. We protect against lawsuits. If we did not include this, employees could claim that they were constructively dismissed or wrongfully terminated during the transfer, entitling them to immediate severance payouts. Second, we assume the history. The new LLP is agreeing to step into the shoes of the previous employer. If an employee has been with us for 5 years, the LLP recognizes those 5 years. This effectively transfers the liability for their accumulated rights, like sick leave, history of termination, or termination indemnity, to us, the new partners. To summarize, we are retaining the staff, matching their pay, and honoring their history, while this bases the liability for past service on the new LLP. It is the only way to ensure operational stability as it honors Partner Kadri instructions to protect the team and ensures that on day one of the new LLP, the kindergarten runs exactly as it did the day before without staff turnover or disputes. Thank you.